Normally, if a U.S. LLC has not elected to be taxed as a corporation and it has more than one owner, the LLC defaults to be taxed as a partnership for U.S. tax purposes. However, in Revenue Ruling 2004-77, Situation 1, P was a U.S. LLC with multiple owners that was treated as a disregarded entity for U.S. tax purposes. The special aspect of the structure in the ruling is that one of the owners, entity L, was itself a disregarded entity of the other owner of P. Since entity L was disregarded, the other owner of P was treated as owning both interests, or 100% of P. Thus, P was treated as a disregarded entity, even though it legally had more than one owner. Situation 2 of the ruling deals with similar facts, except that entity L and entity P are foreign entities, with entity L having elected to be taxed as a disregarded entity. The ruling concludes that P is treated as only having one owner, thus P cannot be taxed as a partnership for U.S. purposes. P's entity classification will be either a disregarded entity or a corporation, depending on the entity classification default rules and whether an entity classification election has been made. It is important to note that the entity classification default rules for foreign entities are not the same as those for domestic entities.